Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. The Dow at one point today hit a record. We were up 1,600 points before giving up half of that, ending the day up 800 points, which is still good, but there's something kind of crazy that happened. So number one, the big thing that moved the market was Pfizer announced that they do have a vaccine that's about 90% effective, which gives everybody hope. And it is another piece of good news of the little pieces of good news we've gotten from 2020. So the market just took off. And then this is the first day that the stock market could react to the election of Joe Biden, because when we found out it was a Saturday, you don't trade on Saturdays. The market was closed. So those two things really pressed up the market, and then it just kind of faded some by the end of the day. Now, 800 points, that's still incredible. I'm not really upset about it. However, some stocks reacted in a way that didn't really make too many people happy. So I have my notes here because it was a lot that went on. So Pfizer was up 7%. Pfizer was one of the stocks that we had talked about that could benefit from a vaccine. Pfizer, Johnson & Johnson, Moderna, and others. It looks like, at least right now, Pfizer is the winner of that. So if you invest in Pfizer, good on you so far. We've got MasterCard. Now, MasterCard, I told y'all about, it was in our stock list. I remember last week, actually, November 1st, I put out a list of 6 stocks that I like that were defensive, that could do well regardless of who was president, regardless of what happens with the virus. At the time we put that out, it was down 3% for the entire year, which I said, for a whole year, that's actually not that bad, especially considering what we've been through. It was up 11% today. Over the entire year, it's up 10% now, just because of today's game. Then you've got Carnival Cruise up 40%, which is crazy, right? Then you have AMC up 51% based on today's news. Now, on the opposite side, you can see why Carnival Cruise, AMC theaters, you could say, well, if we have a cure, that means we can go outside, we can go and do stuff. So all of these companies that were previously terrible, that's changing now. That means they're going to grow, and it just popped out of proportion. Now, I'm a little cautious about that. Yes, hopefully this vaccine does well, we can get it out, everything's fine. But is AMC 51% better than what it was before? Is Carnival Cruise, was it 40% better than before? I'm not entirely sure. I think this is more of an overreaction, an overjoy than, hey, we got a vaccine and now these companies look different. But on the opposite side of things, and this is one reason I didn't want to invest in Zoom, and I told y'all this way back in March and April. If we look here, Zoom was down 17%, and people are swinging in the opposite direction, which is again why I say it's an overreaction, because yes, we got a cure. So people are like, okay, or a vaccine, rather. People, okay, well, look, well, I don't need Zoom anymore. People are going to not use Zoom ever again. That's not true. Work from home for some companies, they're saying, look, all 2021, y'all still working from home. Even so, other companies are like, look, why would I pay rent for this entire building when y'all have been just as productive at home with no commute, and you don't have to leave your house and you can work from anywhere? People would prefer, and we've seen, work in the suburbs. I don't have to travel to the city anymore because I can do this kind of stuff via Zoom and others. So I'm not entirely sure that Zoom is 17% worse just because we got a vaccine. We also know that Dollar General was down 5%. We'll get to that. A lot of the stocks that I really liked and were also on the defensive list also lost. EA, which you guys know, I invest in public. They're the video gaming company. They were down 2%, not too bad. And you got Netflix was down 8%. Now, Netflix, that's a subscription service. People are watching. Netflix has been growing as one of the best stocks of the previous decade. Unless people start to unsubscribe from Netflix, which I don't think is really likely, because once you're hooked in, they get you a good show, you're still going to continue binge watching it. Even if you go back to work, you're still going to watch it. Unlike Roku, where they feed you ads and it's a home TV. You can't pick up your Roku TV and just take it with you anywhere. Unlike Netflix, you got a lunch break, you can watch Netflix, right? So I don't really see why Netflix would have fallen 8%. I'm just looking through the rest of these. Amazon down 5%. Why? Just for what? Like, whether you're home or you're away, if you still got Prime, that is still a subscription service, that's money going to Amazon. no different. You got Black Friday coming up. You got the Christmas season coming up. There's really no reason at all that Amazon should have been down given this news. So again, I think it's a little bit more of an overreaction. As someone who invested in many of the stocks that we've been talking about today, I'm staying put. Like, yes, I have MasterCard. Okay, great. I'm glad it went up 10%. I'm positive. I look very, very smart with that. Dollar General doesn't look great today, but looking here over just this year, from January to today, Dollar General is still up 34%. In contrast, the market is only up about 8, almost 9%. So I'm still doing better than the market in Dollar General. Over the past 5 years, Dollar General is up 210%. So it's always about the long term. Yes, today felt great. We still don't know what's going to happen tomorrow, and things can lose steam. For example, I've been telling you guys and warning you guys about the marijuana stocks. ACB, which is Aurora Cannabis, Thursday up 40%, Friday up 50%, today only up 14. Now, I'm not here to tell you that it's just going to fall off the rest of the cliff the rest of this week. Excuse me. We'll see. We'll see what's going to happen the rest of this week. But you can already see it losing steam, which is why I've been warning people about just jumping directly into it, because this tends to happen with stocks like that. We'll see what happens. Maybe it'll take another pop. We'll see. But a lot of people have already jumped in. They either saw the video the other day or heard in some Facebook group that this is the stock you want to hop into. And 14% is still good, but it's not the 50 that other people saw, not the 40 that other people saw. So you got to be careful about that kind of stuff. But overall, again, I think it was a good day for investors. It's a even better day for long-term investors who, I told you guys it's going to be difficult to time this, because 2 weeks ago, 3 weeks ago, people are like, oh, I'm going to withdraw all my money because I don't know who's going to win. If Biden wins, which he did, well, he's going to raise taxes, and then this is going to happen, and this is going to happen, and the market's going to fall. It didn't happen. At least today, it didn't happen. That's why you want to stick with your strategy, whatever that strategy may be. You guys know from the Investors Toolkit, which you should check out, what those strategies are. I've put out a list of defensive stocks. I put out a list of stocks that are on my watch list, and by and large, those are still doing well, even if some of them didn't do well today. I'm not overly focused on the money that I lost in a Dollar General or the money that I lost in, let's say, Netflix or an EA. You're going to be all right, because today was a bad loss for some of those stocks. But at the end of the day, still look at the big picture. And this is why I like stocks like Walmart, Dollar General, Costco, and the like. Even if they took a 5% hit today, do you still need food? Are you still going shopping for food? Pandemic or no pandemic? That's not changing. That's not going to change at all. You still need those. And like I said, over the past 5 years, Dollar General is up 210%. Netflix over the past 5 years up 158%. MasterCard up 225% over the past 5 years. You are going to use this stuff anyway. So even if it's more of a pandemic play, like we're getting into it because it's been a pandemic and it's done well this year, it still is going to benefit you in most cases beyond that, because that's the beauty of picking good quality companies. I don't pick stuff that's just super, super trendy for right now over the next 2 weeks. As you guys know, I have a 6-month process. When I go and I look at these, I'm saying, which one of these do I think is going to do the best over the next 6 months and has the best ability for me to evaluate in 6 months and continue to hold? This is one reason why a MasterCard makes the list. It's a reason why a Dollar General makes the list. It's a reason why a Netflix can still make the list, because they have a history of doing well before the pandemic. So when the pandemic is over, it can still be there, which is, again, one reason why I hadn't picked Zoom, even though Zoom had done well. I don't know what Zoom is, 2 years old in market terms. They've only been a stock for 2 years. So once this stuff is over, I have no idea how it's supposed to react. I know how Netflix is done. I know how Dollar General has done. I know how EA, I know how MasterCard have done. So I'm relatively confident, or very confident there. I know how, and this is why I haven't invested in these companies either. I know how Carnival Cruises has done. It hadn't been good. In fact, I don't have Carnival Cruise numbers. I have AMC. AMC is down 63% over the past 5 years. So I can say, look, it's still down this year. Yes, it was up 40. It was up 51% this year today, but AMC is still down 47% for the entire year from January to today. And over the past 5 years, down 63%. So my thing is, if we erase the pandemic today, we heard we got a vaccine, assuming everybody takes it. We'll see if that happens. If everything goes back to normal, well, AMC is just going to go back to losing 63%. That's not a place I want to be. That's not going to help me. Things will clear up, and these companies will go back to what is considered normal. Normal for Carnival isn't good. Normal for AMC isn't good. Normal for Netflix, you're going to be all right. Normal for, I'm just looking at the list, normal for a Facebook or an Amazon, normal for a MasterCard, you're going to be all right. So that's how I'm kind of looking at things. I think, again, it's a little more of an overreaction, but you want to stand still, stand pat, follow your strategy. So come Friday, as I've told y'all always, I'm depositing more money and investing in all the stuff I was already doing and not really changing up anything until December, in which case I will come back, reevaluate, see who goes, and see who stays. All right. So if you want to learn more about my process and how I understand investments and how I pick and choose what I think works and what doesn't work, and how we're right more often than not, you want to check out the Investors Toolkit. That link is above. I show you how to, number one, not miss out on opportunities, because you had an opportunity to get MasterCard when it was low. Everybody says buy low, sell high. Well, when we talked about it, it was low. Now it's not low anymore, as well as other stocks that have done well this year. If you want to learn how to do that, how to not miss opportunities, but also how to invest at your budget level and how to make sure that you are testing out those investments before spending your own money, you want to make sure you check out the Investors Toolkit. That link is above. Make sure you hit the share button on all channels, YouTubes, the Instagrams, and the Facebooks. All right, talk to you guys later. Bye.